Well, happy Valentine's Day, folks. And for everybody watching this in the future, happy belated Valentine's Day. And if you're not celebrating today, hey, you can celebrate with me and we can talk a little stocks. How would you like that, okay? In this video here today, we're talking about a stock that is a screaming buy right now. And this one is looking really, really dang good, okay? Additionally, I want to speak about Meta stock in this video here today. The stock goes up literally like every single day. Like it's starting to become even a thing outside of the stock market. People are starting to talk about how does Meta go up every day because it's just ridiculous, okay? So we're talking about what I'm planning on doing with Meta. Am I just going to continue to let these shares roll? Am I going to continue to take profits? We'll speak about that in this video. I want to talk about the same exact subject in regards to Sofi because Sofi continues to move, including another 5% plus move. Congratulations to all Sofi and Meta shareholders, and congratulations to all Palantir shareholders. We'll speak about the same exact subject on Palantir, and I'm going to share a strategy in this video with you guys that if you want to make money on Palantir stock, in substantial amounts of money on Palantir stock, but you don't want to sell the stock, I have a strategy for you that I'm going to lay out for you in this video to kind of talk you a little bit through it, and you know, we can discuss that as well. And then the final subject I want to speak about here today is Texas Roadhouse. Texas Roadhouse stock, which is a stock I used to own and I sold for very nice profits last year. This stock has been plummeting here recently. It reached all the way up to $200+ and now it's down to about 171. So we'll talk about if Texas Roadhouse is a good buy, okay? Appreciate y'all for being here. As always, thank you so much for being here. I hope I'm always your stock market Valentine, okay? If I'm not your real life Valentine, that's fine. But I want to be your stock market Valentine. And I appreciate y'all for always being here. Much love to you. Appreciate you guys that smash that thumbs up button each and every video, and everybody that's subscribed here to the channel, which we are now, how many subscribers do we have on this channel? 830,000 or something crazy. So I appreciate each and every one of you. Additionally, I bought my Valentine this box of chocolates. Now, how much do you think that box of chocolates cost right there? You might say, maybe 10, 20, I don't know, maybe 30 bucks, 40 bucks maybe, $90. I went to C's Candy to get my Valentine, a box of chocolates, $90. Are you kidding me? Oh my gosh, for a box of chocolates, you gotta be flipping my flapjacks. So things are wild out here. Well, everybody else is charging max prices, but folks, I got the one-day sale going on right now. There's 12 hours left as of recording this. If you're watching this later on, there'll be even less time basically going on. If you watch this video tomorrow, the sale will already be over. But 1000X, we are doing a deal right now. Save $30 on a monthly membership or save $800 on a 2-year membership of 1000X, and that is for the entire research platform. The search feature with advanced metrics and mandatory metrics, our compare feature where you can compare 3 companies side by side versus each other, our earnings call tab where you can just type in a ticker symbol and listen to earnings call, SEC filings so you can type in a ticker symbol and look at all the SEC filings, our projections, and we're also looking at getting advanced projections up here ASAP, financials, as well as our beautiful charts feature. And then for a lot of you guys that might be newer to the stock market, you're going to really enjoy this education portion. This is what you really need. So even if you feel like the platform's too advanced for you or something like that, I would still at least join on a monthly membership just so you can get access to the education portion. And I got a couple new education portions that should be coming up here in the next week added to this as well. So pin comment down there, and then we'll also send you your Steel membership card in the mail. And you can bust that out next year on Valentine's Day. And whoo, man, things are going to go very well for you, okay? Alrighty, guys. So let's get into these subjects here, okay? First off, I did a video a few days ago on the channel called 6 Stocks I'm Buying Now, February 2025 edition. And in that video, I mentioned a specific stock named Wynn Resorts, right? That was stock number 6 of those 6 stocks we talked about in that video. And I, spoke about why I think it's a great opportunity and whatnot. Well, they reported earnings and the stock is definitely spiking on those earnings that they did end up reporting. So, what's interesting here with Wynn, you look at the Wynn Palace. This is their premier property. This is their big daddy. This is the granddaddy of them all on the Cotai Strip in Macau. They did $562 million of revenue in the fourth quarter. That was an increase of almost $40 million on a year-over-year basis. So very strong number there. Wynn Macau, the older properties, that would be these guys right here. Those properties decreased about $22 million, but the Las Vegas operations, which is these properties, this was shocking. I'm shocked. Somehow the company increased revenue $2.7 million. I don't know how the heck they pulled that rabbit out of the hat, because this was a year where they had a comp against the insane F1 comps. Now, F1 was in Vegas again this year, but the previous year was the crazy year in regards to F1, where people were just paying like ridiculous room rates, where everybody wanted to come for the F1 race, first time in Vegas. And so the fact that they somehow grew revenue, I was pretty shocked at that. Now, Encore Boston Harbor, a little bit tougher place. They decreased revenue, $4.5 million in Encore Boston Harbor. And then as far as their property they're developing in the Middle East right now, they're still talking about that it's supposed to open in 2027. With how fast it's going up, I'm surprised they're not going to open in 2026, just to be quite frank with you guys. Now, as far as earnings per share, non-GAAP EPS, they did $2.42. That beat by $1.15. Insane beat by Wynn there. They also beat on revenue as well. Additionally, they announced they're going to pay a 25-cent dividend payable to shareholders on March 5th, who are shareholders by February 24th. So do keep that in mind, which I'm looking forward to receiving dividend money there, right? Now, additionally, they got asked on the conference call about what they're going to plan on doing with the land they own in Las Vegas. And Craig Billings, CEO, he said, we obviously have a very substantial land bank here in Vegas. We have years and years and years of growth ahead of us. I often get asked, why aren't we moving on the land in Las Vegas right now? And the reality is, from a capital perspective, from a bandwidth perspective, within our amazing design and development teams, there's so many other things, frankly, there's only so many things we can do at once, essentially, right? Which they got that property they're building in the Middle East right now. Additionally, they're still trying to get that deal in New York City, which, I'm almost kind of hoping it doesn't work out in regards to that. And then they're investigating if, it makes sense to potentially build a property in Thailand. So do keep that in mind as well. Now, in regards to the Las Vegas Strip land, it's very important everybody understands this. This is a Las Vegas Strip here, the green there. And Center Strip would kind of be around like Caesar's Palace in Bellagio area. That's kind of always considered like Center Strip. And then down here, you kind of have the south end of the Strip. And this is the north end of the Strip. So the Wynn's more toward the north end. But Wynn owns literally pretty much the only piece of dirt that's on the premier part of the Strip you want to be. They own the dirt that's right across from Wynn and Encore, which everything else is already developed. So that piece of land there is extremely valuable. I mean, extremely valuable, because you don't have to worry about, knocking a building down or anything like that. It's just pure dirt. It's ready to be built and start to be developed, right? And so it's a very valuable piece of dirt. I can tell you that much. And so the question is, do they ever sell it? Do they develop it? I don't know. I wouldn't mind them selling it off, because they could probably sell it for a big number. I wouldn't be surprised if they could get $1 to $2 billion for that piece of dirt, honestly. That wouldn't be shocking at all. I heard what they're trying to sell Circus for. So I'm like, if they're trying to sell Circus for that, the dirt straight across from Wynn and Encore, oh my gosh. And so, yeah, but my thing is they probably want it to be a very specific project. So I don't know. We'll see what they end up doing with that, right? Now, additionally, you got to keep this in mind in regards to Wynn. If they ever want to sell off their two properties and essentially do what a lot of other resort properties have done on the Strip, they could do that, where essentially they could sell these properties, probably fetch maybe $6 to $10 billion for those properties, and then they basically kind of like lease them back, so they pay like rent to whoever actually will then own the buildings. And so it still stays Wynn and Encore operated, still all their branding and things like that. But essentially, Wynn would then get that massive cash pile, which then if they want to pay off debt, they could do with that. If they want to use the money for other developments, they could do that, right? And then Wynn would essentially pay rent on a monthly basis or an every 3-month basis to whoever actually owns a property. My guess is they haven't done that yet, because I think they're still using a lot of depreciation on the properties. So I think that's one factor. And then the other factor I'm thinking in regards to this whole Wynn and Encore and why haven't they sold it and why they want to keep ownership. Maybe it also has to do something with what if they want to do renovations, and how all that would work. What if something goes wrong? Like, I think there's kind of some issues in regards to that. But the moral of the story is, if they ever want to do that, $6 to $10 billion is out there for them to generate just like that, right? And still be able to operate the property in itself. Additionally, they own this massive golf course right behind the property, and that's a very valuable piece of real estate. It's not as valuable because it's not technically on the Strip like the dirt is they have across. But the golf course, my guess is they could, if they ever wanted to sell that off, they could honestly probably sell it off for easily $300 to $700 million. And I might be conservative on that. Remember, that piece of golf course is right by the Sphere right there, right? Obviously, right behind Wynn and Encore, you got Palazzo Venetian right there. You got the convention center right over here. So, I'm just saying they got a lot of opportunities with this company to generate substantial amounts of cash if they want to keep developing or whatever they want to do here, pay down debt, stuff like that. Now, looking at the income statement here, I gave them a C plus grade. Operating revenues were around flattish, roughly on a year-over-year basis, right? But operating income went to $366 million from $357. Now, last year they had this massive one-off benefit here. This is, benefit from income taxes. That's $499 million one-off. So this year, only $41 million. So that kind of hurt their net income, but it's not nearly as bad as it looks, obviously, because we're talking about, that's what, a $458 million benefit there. It's insane. So moral of the story is Wynn's looking really darn good, and always keep in mind Wynn's always a buy under $100. The further it goes under $100, the more it's like a strong buy. So if you can get it under 80, now we're really talking. If you ever get under 60, count your blessing, because that very rarely happens, and so that's very fortunate there. Okay, so that's Wynn looking real good for the long term. Great company. Meta. Speaking about great companies, this is a whole other level of a great company, right? The stock goes up every day. I think this stock's gone up like 20 or 21 straight days, some insane amount, like just ridiculous. It goes like literally, basically I can count on Meta stock going up every day in the public account. Like the public account pretty much goes up almost every day, it seems like, and a lot of that's due because Meta goes up every day, right? So the question is, what will I do with the shares? Obviously, I've sold off some shares as the stock's gone up more and more, right? I sold off, how many shares did I sell off so far? I think I sold off 200 shares so far, because I think I used to have 1,800 shares in Meta. So I've taken a little profit so far here in Meta, but it's hard for me to like really put a big sell order in regards to Meta. And the reason it's so hard is because the valuation is still really attractive. And this is why I've only sold a little bit of shares so far. Because look at the forward P on the stock's around 28, right? Now keep in mind, Meta comes in and crushes numbers almost every quarter. So you see 28 there and think it's probably going to end up being like 25 or 24 or something like that, right? Look at stocks like Costco and Walmart, which business models aren't even close to being as good as Meta, right? Meta can do business all over the globe, and I don't want to say make money for free, but almost, right? Costco and Walmart are very difficult businesses to make money, right? Like they need to have these massive pallets of crap, transport all around, and selling diapers and selling selling toilet paper and paper towels and selling cases of water and trying to make pennies at a time, right? Tough businesses. And yet Meta trades at far cheaper forward P. And look at Meta's revenue growth rate expected for this year, 17% roughly. Costco's at 8 or 9%. Walmart's at 5%. So this is why it's difficult for me to really sell Meta and get out there and be super excited about selling a big block of Meta. You know, if this stock was 1,000 a day, I would feel a little more comfortable selling a bigger amount, like let's say 200 or 300 more shares. But even here, it's still difficult, man. It's still really difficult. So Meta remains undervalued. It remains the most undervalued big tech company in the world by a pretty large margin, in my opinion. The only company I can think that's kind of in the same category as them as far as undervalued is Google. But the difference is Google's business model is being, potentially disrupted right now. Meta's not. Meta's disrupting business models while Google's potentially getting disrupted, obviously with Google Search, ChatGPT being a competitor, and LLMs and those sorts of things. So do keep that in mind, right? So the moral of the story is in regards to Meta, continues to be a lot of fun, and I do collect that dividend money in regards to Meta, right? Remember, they're paying those fatty dividends, and so every 3 months I get dividends, and I bet you they're going to go up on that dividend amount this year, and they're probably going to go up pretty substantially, and so the amount of dividend money I can make next year is going to be a lot more than this past year. Sofi Technologies. So Sofi, now we're up 126% on this stock. It has really gotten momentum here recently. Up 143% in the past 6 months. SoFi's rolling, like really rolling, right? If we look at their latest, and this is very important, everybody looks at this. This is their latest income statement. I give them a B-. It was pretty respectable, right? But they did have a one-off that really benefited the net income in a substantial way in the EPS. But you look at interest income, went to 743 mil versus 645. But arguably the most important number for the company is if you look at total revenue for the company, right? Net revenue, 734 million versus 615 in the same quarter last year. So the company continues to grow like a weed. Tough thing for me with SoFi in regards to selling, I still can't really sell SoFi. It's too early days with SoFi that I can't sell it. And the valuation would have to get so stretched on this one to make me sell it. Because here's the thing with SoFi. Like when I invested in SoFi, I'm investing in this company because I believe they have a chance to become a financial giant. Financial giants have market capitalizations of $100 billion or several $100 billion. And I look at SoFi and I'm like, geez, if this company could really execute on a high level for this next 10, 20 years, I think they could be a financial giant, but emerge as a much more profitable financial giant than anything we've seen before because of their asset-light strategy. And so overall, in regards to SoFi, it's one I can't even consider taking profits on. Like I have the 3,700 shares and all I keep thinking is, why don't I have 5,000 shares? Like I really wish I had 5,000 shares in the public account. So it is a little bit tougher to buy it now since the stock has went up 143% in the past 6 months, right? But in terms of selling, like I just can't do it. Like I just can't cash those shares there because I'm just like, it's too early days in this story. But at the same time, if SoFi was $100, believe me, I'd be cashing shares right now, right? Even if the stock was $75, I'd be cashing shares right now. The valuation hasn't reached some sort of level that I'm like, okay, this is silly, I got to cash shares. That's $16. It's not at a level where I'm like, oh my gosh, let me go sell my SoFi shares. So that's where I'm at in regards to SoFi. Palantir, same exact subject, right? Palantir, this is a tough one because obviously I've been taking profits on it, right? I had 5,555 shares of Palantir, and I've continued to take profits and take profits and take profits on this one. And it's one I really didn't want to take profits on, but the valuation is getting so ridiculous that it's the prudent action to take profits on this one. And here's why. I posted this inside the prep stock group. And I just, you got to always run numbers, right? In regards to these companies and kind of figure out, especially when a stock goes up 1,497%, and you got to ask yourself, is this justified? Does the valuation make sense? Am I likely to make money in the stock over the next 3 years, 5 years, right? It's something you always got to consider because there's thousands of stocks in the stock market. There's lots of opportunities out there, right? And there's a lot of stocks that are going to go beast mode over this next 3 to 5 years. So in the private stock group, I posted my bull case, base case, and bear case in regards to Palantir, right? And I said, now we really need to get to growth rates of 50% or more to get decent returns over the next several years, right? I said at even 30%, we're looking at dead money for the next 3 to 5 years. So here's what we're looking at. If I can run a bull case, now this is extremely bull case. We're talking about growth rates Palantir, hasn't ever seen or hasn't seen in a long time. 50% revenue growth. Not only are we talking about Palantir getting a 50% revenue growth, which is a very debatable thing if they'll even get there. Then we're talking about staying 50% revenue growth for the next 4 years. 50% 2025, 50% 2026, 50% 2027, 50% 2028. That would put us, keep in mind, $4.3 billion in 2025 for revenue. Company didn't even guide close to that. Company was in like the 3.7s range, right? $4 billion is kind of like a more of a bullish range in general. 4.3 is really stretching it. Like if they do 4.3 billion, I'll be a happy camper, but there's very, very much doubt that. It's very low probability. So in 2028, we're talking about a revenue number of about $14.5 billion, right? And if we're talking about 75% net income growth per year over that time, then we're talking about a little over $4 billion in net income come 2028. So if you're growing top line 50%, bottom line 75%, and people really think they can continue, then maybe the company trades like a 120 to 140 PE ratio, which puts the stock in 2028 somewhere between about 214 and 249, which gives you a decent compounding annual growth rate on the low end and high end, right? But that's how insane we need the growth rates to be for the next several years, for the stock to be a moneymaker over the next several years. This is the case we need. And once again, there's a lot of doubts if that's going to happen, okay? Now, base case, 40% revenue growth, 65% net income growth per year for the next 4 years. That puts us at $11 billion in 2028. That puts us at $3.2 billion in net income, right? At 100 to 120 PE ratio, because they're growing at such ridiculous rates, right? Now put the stock at 141 to 169, basically you hardly made any money. You might even have lost to inflation, right? And in 2027, you got a negative return. Bear case, this is bear case. 30% revenue growth per year on average for the next number of years, right? 55% net income growth on average for the next number of years. You say 80 to 100 PE ratio, and you get a negative return. This, folks, is why I have been taking profits on Palantir because the next several years for the stock do not look good. The next several months, and by the way, I'm going to share a strategy with you right now. If you don't want to sell your shares and you want to still make money on the stock, there's a way you can do that. But this one is going to be extraordinarily hard to make money on. Not once again, for the next few weeks, the next few months, anything can happen, right? If the stock stays momentum name, traders want to keep playing this for this next bit of time, that's fine. But over the next several years, which I'm always looking out, I'm always looking out the next 3 to 5 years. Whenever I invest in a company or whatever I'm thinking about my money's invested, I'm always thinking out to the next 3 to 5 years. How is this asset going to perform the next 3 to 5 years? It doesn't look good for Palantir. I can tell you that. Even with all the great growth rates and even with still accelerating growth, it doesn't matter because of the numbers I just ran you through. The valuation has climbed so substantially now that the company is in like a no-win situation for the next several years. But that doesn't mean the stock can't go to 150 in the short term. Doesn't mean it can't go to 180. Who knows? It could go to 200 in the short term. Like anything's possible, right? If Bitcoin trades at 100,000, anything's possible. Anything's possible. So in the short term, anybody's game. Long term, next 3 to 5 years, ooh boy, it's going to be tough sledding to get much for gains in this one. So here's a strategy if you're like, I agree that I think this one's going to be hard to get gains over the next several years, but I don't really want to sell my shares. I don't feel comfortable selling my shares. I want to just continue to be a Palantir shareholder for years to go in the future, even if that means not good returns over the next few years. I have a strategy for you. It's called selling covered calls. So selling covered calls can be something that you do when you own shares of a stock and you think there might be limited further upside, but you really don't want to get rid of your shares. You could always sell covered calls and do something like that, right? Now, you could get potentially called out on that, but at the same time, you're going to make the premium on that. And that's the whole point of doing a covered call strategy, right? And I have videos inside the private stock group that go all into this, and I'm probably going to be putting together like an options basic and options advanced curriculums and 1000X somewhat soon here. But it's certainly a strategy you can employ if you're looking at Palantir and you're like, geez, the stock's $120 or whatever, and you're like, I really don't want to sell my shares today, but let me sell some covered calls that expire 3 months from now or 6 months from now or a year from now or a month from now or whatever, right? Some people even do it on a shorter term basis where they'll sell covered calls on a shorter term basis, right? So it's a way you can generate premium, especially if you're scared that this stock is going to be, kind of a flatliner for the next few years because the valuation has gotten so ridiculous, right? And at some point, Palantir, the numbers will never be enough. And it's going to be very frustrating to people that have not held stocks before because there's going to be a day, and I don't know whether it's 3 months from now or 6 months from now or 9 months from now or 12 months from now, but there's going to be a day in this next year where essentially it doesn't matter what Palantir comes in for growth rates, the stock will move down. And that's going to people are not going to like that because they're going to be like, how could Palantir come with this number, and the stock is tanking on this? The stock's going down. They're going to be completely baffled by what's going on there at that particular time. And it's going to be because the stock has already priced in everything you could have ever imagined. And so at some point in time, it won't matter. The growth rate Palantir, people will start looking at it from a negative angle. Investors, shareholders, Wall Street will start looking at it from a negative angle. And also keep in mind, there's been a lot of people that have been buying Palantir over this past year that they're not really Palantir believers or those type of people. It's just looked at as an arbitrage opportunity to make money. Like a lot of these Wall Streeters probably don't even understand Palantir's business model. They've just been buying the stock left and right because it goes up, seems like almost every day. So they just kind of pile in money. And then as soon as you start to see some real weakness come in the stock, those people flip out fast. They freak out fast. And then you see a massive cascading of selling essentially. And the more selling that happens, and it just keeps kind of becoming this like self-fulfilling prophecy of this guy sells and the next big investor sells and it's just a whole domino effect there. So, right now we have it on the upside though. We have this domino effect where it's just like people can't get enough of the stock. There's gamma squeezes going on. There's all types of stuff going on in regards to Palantir that's just like dominoes are just going the whole right way. That will break, and they'll probably break in the next 12 months. Potentially it breaks in the next 3 to 6 months. And so, selling covered calls to generate income in the meantime, it's not necessarily a bad strategy, right? I don't mind selling my shares. So that's the thing. I don't mind selling my shares. And the more Palantir goes up, the more I'll cash shares. If we see 125, I'm out more shares. If we see 150, I'm out more shares. That's the thing with me. It's about the money. I'm here to make money, and You know, once Palantir has served its purpose, it's on to the next one, right? And there's a lot of other great opportunities I see right now that are going to be the next Palantirs. And so, you know, that's the way I look at this game. Texas Roadhouse. So this is one I took the profit on last year, right? And recently the stock's obviously had some trouble. So does this one make sense to buy again, right? Now that it's fallen quite dramatically. Well, Texas Roadhouse, such a great restaurant chain. Love Texas Roadhouse. I actually went this week with my family. Love Texas Roadhouse. Love Texas Roadhouse. Just a banger, right? Very good value. But with Texas Roadhouse, the forward P is around 23 for this one. Now, remember why I really sold Texas Roadhouse. I sold Texas Roadhouse really two parts. One, the valuation had climbed immensely. Two, because I felt like Cheesecake was a way bigger opportunity because I had got two great growth concepts with cake that I was 100% convinced with. Texas Roadhouse has two growth concepts as well, but I'm not 100% convinced in them. One's called Bubba's. The other is called Jaggers. In neither one of those, I'm like convinced that like, oh, this is going to be a banger. North Italian Flower Child, which Cheesecake owns, I'm like, that's a banger across the whole United States of America. Everybody's going to see that over this next 10 years, right? And so Texas Roadhouse is much more just a bet on Texas Roadhouse. And so I kind of looked at Cake and where Cake's valuation's at, right? And I said, this is a better opportunity, right? And you can see Cake over the last, you know, you can pull up a 3-month, 6-month chart of Cake. It's outperforming, Texas Roadhouse quite substantially. I think a lot of that has to do with the fact that it has two major growth concepts coming behind it, and it trades at a very attractive P multiples, right? And additionally, you look at like revenue growth. So they have 11% for Texas Roadhouse expected, for somebody like Chipotle around 13%, and Cake's around 8%, right? Cake's got the lowest expectations of everybody. These other ones got big expectations. If they come in with something that's not double-digit revenue growth, people are going to freak out in regards to those, right? And so I look at Cake's PEs, I look at Cake's growth story, and I look at where Cake's revenues are likely going to be, and the fact that it has much lower expectations. I think that sets up Cake very well for the next several years. And so that's why I went ahead and obviously positioned. But Texas Roadhouse, is it a buy? I think it's a fair buy. I don't think Texas Roadhouse is a great buy, but I think it's an okay buy right now. I think it's okay buy at 170. You know, I think the downside risk is if you got into some sort of market dynamic where Texas Roadhouse misses numbers, market goes down, maybe Texas Roadhouse goes to 120, 125 range, something like that on the downside. But so yeah, I feel like it's an okay buy. It's just not a great buy. I feel like Cake, even though Cake's been kicking Texas Roadhouse's butt here recently, I feel like Cake's still a much better buying opportunity for investors out there. And remember, after North Italian Flower Child, Cake has other growth concepts that they're testing right now and are seeing a lot of success with. So including Culinary Dropout and Blanco. So Cake's just got like growth on growth on growth with these restaurant concepts for like 10, 20 years to go in the future. Texas Roadhouse, I wouldn't say they're saturated yet, but I think with the Texas Roadhouse chain, they'll probably be saturated in the next, I would say 5 years, pretty saturated in the next 5 to 7 years. And then once again, with Jaggers and Bubba's, I'm just not sure if those are going to be banger concepts. Like it's maybe like I'm not convinced. Not convinced. So that's kind of where I'm at in regards to that. Hope you guys enjoyed today's video as always. Appreciate y'all joining me. 11 hours left on the 1000X sale. If you're watching this in the future, probably even less time. Pin comment down there, click on that, and you can go ahead and join us in there on either a monthly membership or a 2-year membership. And then enjoy that, suck up all the knowledge, enjoy the education section, and enjoy the entire research platform so you can make much more informed decisions than what you've been making in the past. Much love and have a great day.